Talk to us first, Jamie, about the competition and how indeed you're less risky, because you actually changed the business model. You're quite different from what WeWork offers, right?
Yes, so we're the largest premium provider in our sector. We have about 80-something locations across 45 cities, and we're known for three things. So the first is we have the highest customer satisfaction in our industry. The second is, as a result of that, we have the strongest unit performance, the highest margins, the most consistent performance, which has enabled us to do the third, which is to be the first company in our sector to move from signing leases with landlords to partnership agreements with landlords.
What makes you premium?
Our value proposition is that we deliver the most productive workplaces in the country, and we help customers actually measure that their employees are more engaged, more productive, happier when they work out of an Industrious. No one else in the sector is really trying to actually do that with their customers.
Can you talk a little bit about what you intend to do with the round in terms of using it to fuel like international and local expansion, which cities in particular?
Sure. So the shift to partnership agreements means a much more capital efficient business. So we're able to really take those proceeds and say, what do we want to do with this? And we're going to continue doubling our network in the US. So we'll launch 60-something locations domestically next year. We're also starting our international expansion.
Okay. So you're not saddled with lease obligations, of which we know WeWork has about $47 billion worth. And you say, look, that's inherently less risky. You've got contracts lasting, what, 15, 25 years with some of your partners that you'll go with the landlords. But inherently, isn't this therefore less profitable? You're taking on less risk, but it's less profitable than what WeWork is going to get?
So the average management contract or partnership agreement, we put up about a fifth the amount of capital that we would in a lease, and we make about half as much. And for me, it is true, it's a little less profitable, but for something that's sustainable, for something that enables us to grow this business and become profitable, you know, for example, our units throw off enough cash to cover 92 or 93% of our overhead. It'll be more than 100% in a few months. That's very different than the rest of the industry.
Geographically, talk to me a little bit about this, because I mean, office space and the flex working space, it isn't really anything new, particularly if you're in one of these sort of big coastal kind of creative capitals. Once you get outside of New York, San Francisco, what's the type of market that you're dealing with?
So we have a lot of suburban locations. We're in mid-sized American cities, at Tampa, Madison, Wisconsin. And part of the value proposition of that is you can say to a company, hey, we can take care of all of your non-headquarters workplace needs. We've got your Dallas sales office, your Madison, Wisconsin engineering office. And that's really powerful for companies rather than having to work with 17 different providers in 17 different cities.
Can you talk about the investor mix? I know you focused a bit more on landlords. Some of your rivals maybe tapped venture capital funds. Like, how did that come about?
I think we have a long track record now of knowing how to be indispensable to occupiers. If we're really going to be the best partner to landlords, we do have to understand their pain points, their desires, the ins and outs of the sort of business dynamics, and bringing landlords into the cap table so they're in the room with us as we navigate this. That was like priority number one for this round.
Jamie, the fact that WeWork is going public, everyone's slightly biting their teeth about it, worried about the transparency of the prospectus, wondering how it's going to go. Do you think it will be a net positive or negative for your business?
I mean, really only time will tell. Like, we're going to focus on building the most capital efficient, profitable business we can build. And, you know, the market is the market.
Well, okay, but the market can be pretty merciless too. And I mean, you've got a lot of competition here. You're obviously dealing with the Goliath in WeWork. You're dealing with smaller competitors. You're dealing with established real estate companies that are looking at you guys and saying, why should we let this small startup come and, you know, hone in on what a lot of these companies thought was their business? So I'm wondering, how do you navigate that in a way as you're going out further and raising money, whatever the iteration of this company is, whether you stay private or whether you go public, you've got to sell this to investors. How do you sell it to them in that environment?
One reality of WeWork is the value is so high. I mean, they could have a horrible IPO, and that's still a pretty healthy public market comp at a third or a quarter the price. But more importantly, it's different. You know, if you think about where those criticisms lie in the S1, if a business appears that's capital efficient, doesn't have liabilities, is profitable, and has clean governance, I like being in that position regardless of how the WeWork IPO goes.